Awesome. Well, we are live. Ricky and Laura, thank you for being here. Everybody, thank you for tuning in today at 3 o'clock. Welcome to our Facebook group, Agents Who Win. We want to bring value back to everybody. The idea of the Agents Who Win is we want agents who want to win, want to provide stuff that's going to help them grow their business and succeed and everything else. If you haven't followed us, like us on Facebook, YouTube, and Instagram so you can get the updates and all the other little tips and tricks that we talk about. Ricky, I wanted to introduce you. You're National Business Development Manager of the RELO program for Amerifirst Financial. You're one of the leaders who made the program possible for realtors, and the compliance team of Amerifirst Financial spent over a year with the CFPB to get this approved. Getting funded by a lender is an awesome idea as an agent because we are business partners with every client that we bring to you guys.
That's right.
And I want to introduce Laura. She's a realtor with eXp Realty. Also a realtor for her own investments. So she found a way to, if you're buying properties, why not get paid on the other side? Grab your license and take that side as well. From Scott, you're in Scottsdale, Arizona. You saw the value in the program and how it could dramatically impact the future of success in the real estate community. So, Ricky, if you could share with us a little bit more about the background of Amerifirst Financial.
Yeah, sure. So I'm happy to be here. Thanks for having me on. RELO is my baby, so it's. I think you're going to get a lot of really good tips and information regarding this program and why it came to be. But Amerifirst is a servicer, number one, which means we get rates and loans directly at the window. We don't have overlays on our products. We service our loans. So basically, what Fannie Mae says we can do, or Ginnie Mae or Freddie Mac says that is allowed, then we do it. So we're pretty innovative when it comes to that. We back every loan with a guarantee that it will close up to $15,000 that will pay the client if something on our negligence happened and the loan doesn't close, then we back it. So it's just little things like that that really set us apart from every other institutional lender out there. It's because we truly care about the client experience through buying a home and getting a mortgage.
Awesome. Laura, and how did you hear about the program coming from the real estate side of things?
Well, actually, COVID hit and everything kind of slowed down. I had a lot of trips planned and they were all canceled. So I was talking to my friend Rob Flick, who also got me into EXP, and he said, "You've got to check this out." And so I did, and my husband and I both checked it out, and we couldn't believe that it's not being done already, but we're the first people to do this. We got really excited about the opportunity. We don't need to have a job. We don't really have a traditional job. We just live off of our real estate investments, but we saw so much potential in this. We decided to get involved and help realtors with their business, doubling their real estate business.
That's what I want to kind of dive into in a little bit. So I'm going to, so everyone online, forgive us if we have a little technical error. I'm running a slideshow for my laptop while working off the desktop. So I'm going to be hitting the slides and I may be off topic here a little bit. So biggest question, how can you legally pay realtors for referring mortgages and how much do you pay them?
That great question. So everyone thinks that it's illegal to pay a real estate agent on the commission on the mortgage, and it is absolutely legal. The only distinction is government loans, VA, FHA, and rural housing. Those are the only loans that you cannot get paid on legally. And we pay for any referral on any conventional loan, jumbo loan, non-QM loan, anything that isn't government. We pay the real estate agent up to a half a point, up to $300,000. So we cap it at $1,500 just for pricing's sake and for to stay competitive, because we want to make sure that the program doesn't cost the consumer any money, right?
Right.
So we cap it at $1,500. So pretty much, the average loan amount nationally right now is $315,000. So most real estate agents that are acting as a RELO agent right now are maxing out their comp on the loan side as well, and making $1,500 every time they do a transaction.
And also, we got a few different slides that will describe all of that. I know you probably can't see it, Ricky, because you're in your vehicle.
Well, let me know if you want me to. I can go to the next
Yeah.
slide. So, dual license is 100% legal. That's a big question. I see that in a lot of the Facebook groups. Can you have a real estate license, an appraisal license, a mortgage license, an insurance license? Everyone's trying to get a dollar somewhere where they can.
Right.
Obviously, I just want to work on one business and be successful at that. The mortgage side is really tied in heavily with our stuff. So that's something where we like the partnership there. Real estate agents, RELO agents would be hired as a mortgage loan officer. So here's a question: do you have to get your mortgage license to get this?
You do.
Okay.
Yes.
And so you guys are based out. You're in all 50 states except for which ones?
New York, and one other state. We're in 48 states.
Okay. And you're not tied into the Amerifirst that's in Florida. There's another Amerifirst mortgage that's in the
two different companies. Yeah,
Okay.
that one's out of Michigan.
Okay, perfect. I just want to be clear on that one. How hard is it to get the mortgage license?
Well, if the real estate license is typically 90 hours. Ours is.
Yeah, I guess it depends on the state.
Yeah, it depends on the state. Arizona's 90. I think Texas was like 120 or something.
Yeah.
The mortgage license is 20 hours.
Okay.
So it's all done online. It's simple.
Okay. And we would just, if we were to go get that license, we would just hang it with your office.
Yes.
What is the step? And Laura, tell me if I'm jumping ahead on the slides here, or if I should go.
No, go ahead and go to the next slide because we can.
Okay.
Yeah,
Right,
this was just a clarification that you can't do government loans like Ricky said.
Got it. Okay. You're getting paid 50 basis points, and then you show the example there.
This is a visual. And Ricky, can you see the screen, or do you want me to?
Yeah. No, I can see it.
Okay. Go ahead then, Ricky.
Yeah. So in this example, if you have a purchase price of $300,000, $270,000 loan, you're putting 10% down, and you're going to get a half a point of that $270,000, which is $1,300, $1,350 extra on top of your already commission that you get for real estate. And you're not really doing anything different. The only thing you have to do is get the license. Okay. And then the rest of it is the same. They still get the loan. You're not having to do the loan. It's just a way for you to get paid because you went out and got a buyer.
I mean, you got to think about, I guess here's a question for you. What is so if I guess let me back it up. My business is about 120 deals a year. We're about half buyers, half sellers. Mm-hmm. So what do you see on an average agent, their ratio to FHA, VA, and conventional buyers?
It's conventional loans are about 75, almost 80% of the market as a whole. Right now. And that's growing.
If I was to say, Lynn, our average price is around $300,000, I'm just going to get a calculator real quick. If we were 50 deals a year, that's 4 loans a month that are, we did 120. So if you figure 75%, you're maybe 45 to 50 deals, and you're at $1,500. That's another $75,000 that I could be bringing into my business to either put back into something else or reinvest back into my business. That's huge.
It's huge. And you didn't do anything different than what you're doing right now, other than you went and got a license.
Yeah.
Nothing else changes. The only thing that really changes, and this is what I'm noticing over and over and over again, is the education of the real estate agent on the lending side makes the partnership with the lender completely transparent and easy, because they now understand all the nuances of what it takes to actually do a loan. They don't have to do the loan, but they know what it takes now, as opposed to just passing it off.
Yeah.
It's great. Yeah.
So can you talk about this for a second? You've got double your real estate business with marketing dollars. You're saying if we do 4 sales per year right now, we can increase to 8, making it or increase it another 8. How would we take the 4 sales and make those another 8? Are you just thinking with the dollars we have?
Yes, Todd. So actually go to the next slide.
Perfect.
So actually, this is actually another part of it. We might have missed the slide here, but there you go, right here.
Okay.
So you basically, the average cost to acquire a real estate lead that closes nationwide is around $700. So we recommend, although you can use the money for whatever you want. So you take that $75,000 example that you did, Todd. You could use that to go on a vacation, buy a new car, whatever you want to do. But if you actually decided to go ahead and transfer that money into marketing dollars, you would end up at that point being able to acquire all those additional sales. So if you have an average of, let's say, $1,500, and that would turn into 2 new real estate sales. So if you currently make 4 real estate sales a year, like if one of your agents does, they can increase it by another 8 sales, totaling 12 new sales per year, 12 total sales. So they basically even tripled their business if they actually allocate the money that way.
And that's just putting a little bit of money back into some, whether it's pay-per-click or Zillow or something.
Exactly.
Ads and giving you the cash for it. Okay. All right. So method 2, you wanted to talk about. I like the downline side of it. That's kind of the model of EXP as well. So it's just a sister. You can call it a sister business to that.
Yes, it's a great part of the business. We all love this part of it. So it's very similar to EXP. One of the things that I like about EXP is the revenue share model, and we can do the same thing. And our business was actually planned over the EXP model and the Keller Williams model because they're the ones who are the fastest growing real estate companies in the country. And it is because we're referring business, we're referring agents. So this way we're going to refer mortgages just like we're referring agents to EXP. We can end up building a team of people and another team of agents who can also benefit from this program, and we can get paid on that. You could go to the next slide and I'll show you how it can affect.
Perfect.
I know this is really small, but I know you've got a copy of it, Todd. So if at the end of the program everybody would like to see this or have a slideshow sent, I'm sure you can forward it their way if they let you know.
Yeah, definitely. Anybody who wants it, we can shoot over the slideshow so you can see I've got my stop sharing button. Actually, I can hit hide on that. Sorry, technical errors that I don't see. There we go.
So this table here is so not only in your case, Todd, would you be able to gain an extra $75,000 of income to build your business, but if you were the rock star that goes out and brings 20 agents into the business, but all the people that you brought only talked to a few people and only brought 2 agents into the business, and assuming that each of them did 4 transactions per year, you would be looking at this top line here of personal production. The first requirement, you have number of agents. You were going to assume a $200,000 average loan size, and the 50 basis points as the commission. So basically, on your own personal production, if you just did 4 loans a year, you'd make $4,000, which isn't very motivating. Not going to get most of us out of bed, right?
Right.
But tier 1, if you bring any amount of agents into the business, you're going to get paid on the first level in tier 1. And if you were really going after it and got 20 agents, that would mean that you'd be creating 80 loans at $200,000. You would be paid $100 on every one of those loans. And those were loans that your people that you brought in did. Those are things that you don't even know are happening. And you make a total of $8,000 that are just plain residual. Then the next part gets even more exciting because that's tier 2. In order to collect on the tier 2, you've got to get 5 people that you personally sponsored in your tier 1. But at that point, if you take the 20 times the 2 agents apiece, you've got now 40 agents. And we actually, that equates to 160 loans. And on the second tier, we pay $140 per loan that's referred. So that brings another $22,400 in. The next 3 levels down, there are requirements of how many people you have to be able to bring in, how many agents you have to directly sponsor. But it goes down to 7, 10, 12, and 15 on each of those levels. You get paid $40 for every one of the loans. As you can see, by the time you get down to tier 6, if every agent is just bringing in 2 more agents and each agent is only doing 4 loans at $200,000, you're looking at $102,000 of residual income. But you get all the way down to tier 7, that's where you're going to have the most income, and it doesn't take long to do that. In fact, we know people who are already starting to get into tier 7, and this program has only been around, really actively marketed for a few months. That would mean you have 1,280 agents, and that would be 5,120 loans, and we pay $100 on the 7th level, which would bring in another $512,000. So if you actually just did this, in a short amount of time, you would end up being able to create residual income of $738,000. And the other thing that's a benefit to this, Todd, as a fellow EXP agent, we love EXP, but EXP actually caps out their agents as far as once you've been paid X dollars on an agent at X level, like if, once you've been paid $3,000 on that agent's production, let's say they go icon, you stop getting paid on them. There's no cap on this. You can
Right.
have an agent who does 100 loans, and there's no cap. You get paid on every one of them.
So that's what I like about this. So if I you're talking the average agent's doing 4, so we're averaging 50 loans a year.
Exactly.
But I bring in John, so you're going to get paid on all 50 of those loans.
Correct.
That's right.
Perfect. Yeah. I mean, this sheet right here shows the power of numbers. When we moved over to EXP, I didn't really pay attention to the revenue share side of things. We wanted to concentrate on the real estate sales. But once you start diving into how the revenue share models work with companies, it just takes a little bit of growth in the beginning, and then it just explodes. And it's a little bit of work, but and you're really talking, I've got to bring in 20 realtors to the company. And then once they go gangbusters, I'll automatically unlock to level 7, but they've got to, they've got to obviously build down below as well.
Absolutely.
Okay.
Exactly.
I like that. All right, let's see. Next slide. Ricky, we talked about how it's similar to the EXP model. Let's see what we got here. And tell me if
the page right before is good, Todd. The previous page, because Ricky, I know that if a realtor wants to join the program, a lot of realtors would want to know how Ricky will take care of their clients.
Right. That's a great question. So when you come in and you get your license, you refer your client to an apply now link that we're just gonna add to your website.
Okay.
So on your website, they're gonna click the button, complete the application, which actually our conversion ratio on a typical realtor referral is 85%. Okay, just on normal business. In RELO, it's 100%. And the reason it's 100%, when you're doing your buyer consultation, you're talking to the client already about how they're going to pay for the house. Well, that's a natural transition into, okay, great, click this link, let's get your application filled out, right? So that piece eliminates the loan officer having to get a hold of them after you've already converted it. So, because they're already converted. So what happens is the loan comes into the system and it automatically generates everything. It generates a needs list. It generates their credit report, the DU finding. So by the time it gets to the team, which there's 17 people total on the team that handle the transaction, the actual loan transaction. So we're averaging right now about 22 days in a 40-day market for closing. And it's because of the way the system is up front. Okay. Awesome. And the way that the process goes. So I know that every single real estate agent that is here watching this or that will see this wants their loans approved and docs out in 20 days or less. Like we all want that because it's the most fearful piece, right? It's when is my loan going to come in? When is that going to be done? Can I order movers and furniture and or do I have to wait because we're going to close late? I saw a recent stat. This was from Fannie Mae. It was 78% of loans were closing late. I couldn't believe it. I know everybody's busy and I get that, there's a lot of refinances going on and all that. But if you do everything up front, I don't care if your timelines on processing and underwriting double, you should still have enough time. And for 78% of transactions to be closing late, that was just crazy to me. So you have somebody at the helm, me, that operates this team at a very high level. I'm a military guy. And I run everything. It's dress right dress. Like you have this job, you do that piece. When you're done, it goes to this person. And it just makes it seamless. We're like a conveyor belt. So as you're coming through and your loans are coming through and you're tied directly to it and getting paid, you look really good to your clients, which is important for future business.
Yes. And then the next slide there, Todd.
Thank you. All right, what if I want to keep working my loan officer? That's a good one because we have, everyone's always knocking on your door to try and earn your business.
Yeah.
And we've obviously got our 2 or 3 that we're typically loyal to from either the way they work or partnerships we've created through marketing dollars or other stuff. So let's talk about that.
Go ahead, Ricky.
Yeah. So listen, my main job at Amerifirst is to grow Amerifirst, right? I'm a production manager nationally, and I am constantly looking for good loan officers to help them double their business. And the way that they're going to double their business isn't the way you're thinking. Right now, all their businesses is doubled anyway because of refinances, and everybody thinks they're a hero. Right? They think that all of a sudden they're Superman because they did 10 loans and they've been averaging 3. Well, I took a kid that got his license, literally just graduated college, came into me, got his license in 3 months. His second month he closed $2 million, and he thinks he's a stud. I'm like, listen, you're in an environment right now where if you sneeze, you can get a loan, and anyone wants a 2% rate. Well, what happens when it's 5%? It's going to happen. So loan officers, they've got these blinders on because all this business is coming in and they're inundated. They don't even know what to do with it, but they're forgetting the most critical piece to a mortgage business is a real estate alliance and having realtors as partners. And that's how I built my business. I'm crushing it too, but not because of refinances. It's because I have over 1,200 real estate agents in 22 states that know my name and know my team. And it's because of RELO. I always give back. So what do? I say, hey, Todd, listen, I know you probably have a couple of lenders that are really good. And if they know you and they know your clientele and they know your agents, I would love to meet them. I would love an introduction. And then I show them the program and show them how we can double their business. A lot of times, it sounds too good to be true until they see it. And then they jump in and they get their first 10 agents signed up, and they get their first 10 agents a paycheck, and it's lights out. So we want loan officers. We want to grow that side. So now what happens if they don't come? And your loan officer is, he's really good friends and, and this and that. We get that. Listen, 75% of the business is conventional. The other stuff, give to them. We don't care.
We can still do the VA and FHA loans.
Yeah.
We just can't pay the realtors on it.
They're just you're not going to see the credit on it. So,
That's right.
No, it makes sense. Right. I mean, it's one way that if you show them that residual sheet, it's just a matter of they're going to see that. And hey, Mr. Agents, you got our 20 or 30 that we talked to, get them all a license. You're going to have to take some 20 hours of class or 10 hours of class, whatever it is in the state of Florida. I have not looked at it in 25 years. Yeah. I almost got my mortgage license, took the weekend class, and then didn't go to the test as I was trying to figure out my real estate business back in my early 20s. But so it's, if they can see that and they want to come over, that's a big play, and they can definitely see the residual side of things there. Absolutely.
Because if you think about it, Todd, you probably know a lot of real estate agents being in the business as long as you have, right?
Oh, yeah.
And I know a lot of real estate agents. Laura knows a lot of real estate agents. And we're going to be talking about this because I can tell you, here's what I know to be an absolute fact. Every partner I have and that I've ever had in this business has always wanted me to pay for something, whether it's Zillow or the client parties or whatever. And rightfully so. You're out hunting the business. You're the one out knocking on doors and cold calling to get that buyer while we sit back and take a loan app. So I've always been quick to jump and invest in stuff, right? And this just makes it so much easier to give you the marketing budget and let you go handle it. Now, some real estate agents really don't know how to market. They don't know how to spend money on marketing to generate a deal. We do classes on it. We do classes on making Facebook ads, making Instagram ads. I'm actually learning TikTok, believe it or not. Which
Let me know when that class is, because
that's been a hilarious experience, by the way. Yeah, my daughter was laughing at me. She's like, "What are you doing?"
Yep.
She thought I was going to throw on some yoga pants and start stretching or something. But so, you know, when it comes to having marketing, the first thing you have to do with any marketing is have a budget.
Right.
And you can either carve off your own commission or use what you can get from the mortgage,
Right.
and really partner on that side of it. Right. I think I was telling you right before I got on that I was visiting my branch and not ranch, in Nevada. And that branch came because of RELO. The owner of the office has 228 agents. He was looking for a mortgage partner. And so I went in and I'm like, hey, I go, that's great. You want rent and, you know, stuff like that. And you want me to pay for parties, but why don't I just pay you on all the loans? Right. So we started that in, we moved in, what are we in, August? Yeah, COVID hit, right? Nevada got hit pretty hard. So it was July.
Okay.
August, paid him $8,800. Okay, so July, August, paid him $8,800. September, he's going to make a little over $12,500. The rent he wanted was $2,000.
Yeah.
And all he did was have his agents use his link to start their mortgage app, and we closed the loan and paid him off.
Right.
So there's so many things you can do with this.
Well, and the big thing too, what Ricky's talking about, because we've been talking to multiple other real estate brokerages, is that when they look to get a mortgage alliance, it normally costs them a lot of money out of their pocket to get it started, and there's nothing in it for the agents. So they've got to have a lot of overhead. Where right now with us, all you need to do is get your license, get your loan officer license, and pass the test, and then we take care of the rest. And we will pay the realtors if they want to get their license. So most of those plans with mortgage alliances don't incentivize the realtors. In fact, you know, you've got, I would even say, you know, Keller Mortgage. We're in several Keller Williams franchises because there's something in it for the agents, and there's not with the Keller Mortgage.
Right. Well, you know, it's just talking about the marketing side of things, and I think we lost you, Rick. You went black. It's Zillow, for example, I can only collect up to 50% of what I'm paying for my lender. So if I'm, let's say I'm spending $3,000 a month, they're giving me $1,500. That's one loan. Typically they want to see 3 or 4 loans for that amount of spend, and so it allows me to control that a little bit more. And then on the parties and stuff, it's like, how do you brand it? How do you do all that stuff so you are truly compliant? This takes the guessing game away, and I could take the entire $75,000 and spend it however I want, and not have to worry about CFPB or whoever else coming in to look at us. You're still on a black screen.
Yeah, I don't know why I don't know what happened. I saw it went black. I didn't do anything.
The last section. All right, I'm gonna hit the last slide. We got one more. Okay, that's it. They're getting started. So I had a couple of questions I wanted to ask that I was writing down as we were going. So I bring a client into you guys. I just want to talk about the process from the real estate agent side, referring the business over. Normally we've got our local lenders we want to refer to, so we can kind of control the process and stuff, versus someone out in Arizona, New York, wherever. How are you guys? Who handles the file the minute once they click apply now? Do I have the same lender over and over and over again on all my files, or is it one of your 17 people?
No, you'll have one called a Sherpa that will handle your file 100% of the time.
Okay.
Behind them is the team that gathers paperwork, submits to processing, or is processing, but they're the person that is going to handle it from inception to close, and it's going to be your communication outlet. Okay. our thing within the team is communication. We communicate at a very high level. So there isn't a moment that goes by that you, your client, and typically the listing agent as well aren't updated on this process.
Okay, awesome.
As the loan officer on the file, you're updated the same as we are, except we're just going to re-update you with what that actually means. You're going to get the emails and the notifications, and it went to processing, it went to underwriting, it went to docs, it's clear to close. You're going to get that all real time. And you can log in at any point and see where the loan's at, which you've never had that access before.
Right, which is nice. I'm not waiting on a callback or anything. I can log into my own backend system then, which would make sense.
Yeah.
So, random question. You guys, you're a correspondent or direct lender?
We are a servicer.
Servicer, okay.
So we service the loans.
So
yes.
if you guys do a loan for me, I'm making my payments back to you guys.
That's right.
Okay, perfect. And then trying to think what else. You kind of answered that all in one because I want to know how many people hit the loan. We have a dedicated person on hand. Do you guys, so if we were to sign up and get our license, then we would become like, I have a branch office for EXP in the Orlando market. So I would be in a Amerifirst branch in the Orlando market for you guys, or do you not have that set up at all?
That's right. Yes.
So yes, well, it's yes that we would be a branch for you, or no on the other side. Ricky, you there? Ricky, he's in the desert hanging out.
Yeah. Well, sometimes signal can be a little weak over out where he is.
Yeah. No worries. It's definitely a question we can get answered. I'm just more curious because if we can set up as a branch office, then it'd be pretty cool to have these sign out front as well. You've got your realtor and mortgage, and title and all that in one. You call yourself that one-stop shop, which would be a pretty cool marketing plan to clients if that is something that we can do. I don't want to show something that's not there because, like you mentioned, there's an Amerifirst mortgage already in the Orlando market. I don't want to have people think we're part of that if it came down to that. So,
sure.
Anything else we need to talk about, Laura, or is that pretty much covered all?
Yeah, it looks like we may have lost Ricky. So for all the agents out there who are listening, it's a pretty easy process. There's Ricky back again.
Yep.
It's actually, do you want to get Ricky?
I can't hear you now.
You want to get Ricky? Todd had another question about branch offices. So did you want to?
Can you hear us, Ricky? Can you hear us?
Can you hear us, Ricky?
Nope.
Then I'll just say we can always clear that up, and but it's easy to get started. If an agent wants to join, this joinrelofunding.com has a 12-minute webinar that you can register for, and all they do is just put their name and email in that. They watch the video, and if they like it and they want to get involved, it's really like enrolling somebody in EXP. They can sign up with your code, Todd, which is always the first 2 letters of your first name, first 2 letters of your last name, and then the last 4 of your social, and then be able to get at that point, by the following business day, that agent will receive a packet of steps to get started. And first is to obtain your NMLS number. We have discounts on the classes. They're all online classes, so you can take them on demand. You've got to take 20 hours within 12 days. At least that's how Arizona is. Each state is different. And once they're done with that, they register for the test. We've got a person in our licensing department at Amerifirst who takes care of explaining and walking you through each step. So you don't have to know anything. Our licensing people will take great care of you. And you get your license. Then you get sponsored by Amerifirst, and you're good to go. You get your own portal and can start getting paid for referring mortgages.
So if I get my license here, I know some of the lenders say we can lend in all 50 states. I know you guys you're in 48 or whatever. If my friend in Chicago wants to hit a loan with us, can we do or get him into the system?
You can definitely get him into the system. You in order to be paid in the for the loans they do and the downline aspect of it, you will need to actually get your license in those respective states. And,
Okay.
and I've actually got, Illinois was pretty easy, surprisingly. I got my license there too. And, I've been getting licenses in a few different states just because this has been growing so well. And people that I talk to are in different states and they know people in different states. So, at a point where it makes sense, where you're getting some business in those states, it makes sense to go ahead and just take the classes. And fortunately, you only have to take the test one time. You never
Okay.
have to take that test again. As long as you keep it current, you don't let your license expire.
Right.
All you need to do is you look at the state-specific information, which Amerifirst will send over via email, and will tell you exactly what you need to do and step by step for that particular state. It's usually just another 2 to 4 hours of online classes.
Okay, perfect.
Laura, did you go through the licensing, how the company will help them through that?
Yes.
You did?
Yeah.
Okay. I lost sound, so.
No, it's
Yeah,
okay.
Sorry.
Love the mobile stuff. It's
Yeah.
fun.
Yeah.
Rick, one of the questions I had before when we were losing you was, so I want to get, I have a branch office for eXp Realty in the Orlando market. So if I got the license, and would I be able to set up a branch market through my office here as well, and like have the sign out front on the window, that we're mortgage company as well?
Yeah, we could.
Okay.
Yeah. Yeah, that's what I'm doing in Nevada.
Okay. Yeah, because it's like you can market yourself as the one-stop shop, where it's like
That's
I've got the real estate, lender, title, insurance, all in one spot.
Right. Did you, Laura, did you talk about refis at all?
I did not talk about refis. Would you like
Okay.
me to, or would you like to?
Yeah, so I have one of my RELO agents in Texas last month made, I don't know, just a little shy of $7,000 on refinances. All he did was send out an email to his database of clients that he's closed transactions on, and he had like 6 of them use his link to get a refi.
That's awesome. I mean, it's
another avenue.
Too. Yeah.
Another way to service your clients.
Right. We want to reach out to them with our partners and say, if you guys are in the 4% range and you want to refinance, talk to your lenders, and now's a great time for the market, et cetera. Oh, by the way, click apply now at the email, and then you can go ahead and get started.
Yeah, exactly. Yes, exactly.
It's
that
awesome.
easy. Yeah.
Well, cool. Anything else? Otherwise, I think that covers a lot. I'm excited about the program. I want to dive into it and just learn a little bit more on it, and potentially find out about getting that license, because we want to figure out the new mortgage partnership stuff. It's another ancillary service that we can definitely, get some more benefits from to provide back to our business and do things. So Ricky and Laura, thank you guys for being here. Guys, if you didn't catch the record, if you didn't catch this, you want to listen to it again, we will have it playing on the Facebook group and on YouTube. Subscribe, get the alerts, check out the website at joinrelofunding.com. And I'm going to guess RELO means real estate loan officer.
It does.
Yes.
Perfect. Awesome. All right, everybody, thank you for tuning in, and